BTD Capital Fund Dip Plus Free Alerts, the actively managed ETF, is powered by an AI that's been trained to apply the classic buy the dip strategy to manage the fund's portfolio. While other AI-driven ETFs have also deployed emerging tech and stock selection, DIP is the first fund on the market to use AI for both picking the stocks and directing the trades. Kaiju ETF Advisors, the company behind the AI-powered active ETF, says it chose a buy the dip strategy for its first ETF as a kind of proof of concept of its proprietary AI. The relatively conservative trading strategy tasks the algorithm with finding large cap stocks that are temporarily trading below their mean and then selling them a few days later when they bounce back up. Here's how DIP works and what separates it from the other AI driven ETFs. The AI behind DIP has been trained to find stocks and plan trades using over 25 factors that the team of financial behaviorists, mathematicians, and data scientists who built it have identified as predictors that a price is both artificially low and likely to move high in the next few days. The fund will hold 25 to 100 positions, but it's not intended to hold any of them for long periods because it's not designed to time the market. Instead, the AI is programmed to identify individual stocks that look like they're priced temporarily and artificially below their mean. Then it exits positions after a few days when the price has ideally moved higher and starts looking for the next dip to trade. The AI relentlessly repeats the strategy over and over and over with the goal of generating returns by capturing as many dips as possible. Capturing just a piece of the price action in either trade like this, rather than trying to ride an entire anticipated rebound, is a risk management strategy, but also a likely recognition of the limits of AI. The powerful tool has proven itself pretty formidable when it comes to predictive analytics, but its accuracy decreases with longer time horizons or larger, more complex conditions. This can make it difficult to generate consistent returns with a buy the dip strategy, but that's exactly where an AI can help. It can parse through billions of data points in seconds and follow a set of rules without deviation. So it's just the right kind of tool to help an investor find more dips than they can find on their own and stick to the parameters of a strategy without letting human error get in the way. Kaiju chose this strategy for that reason. It's a simple concept that can be set up as a purely technical strategy, relying on AI's pattern recognition and predictive analytics without tasking it with trying to forecast longer horizons or more complex market conditions. It's also a relatively conservative methodology, as it's just trying to identify oversold stocks rather than anticipate trends or predict explosive growth opportunities. The hope is that a more conservative, by focusing on dips in large cap stocks and ETFs, AI-powered ETF can help build trust among investors who are wary of some of the relatively more outlandish claims that have been made about AI's market-beating abilities. But DIP is just the first in what's expected to be a growing portfolio of AI-managed funds. While there's not much word yet on the next ETF that'll be launched, Kaiju says it's working on more AI-powered ETFs for retail and institutional investors alike.